So I'm hoping by this point you've read the risk warning on the screen. Let's switch gears to the platform. Maybe I should close down some extra programs on here. Okay, I think we're all right. So starting with the FX market, actually where some of the more interesting moves have been taking place, notably within dollar yen, which saw a big breakout of it, breakdown below its long-term range. I did send out a report you may have read last week about the breakout in the yen. But we're going to start with the euro here. So we're basically testing the water at this 125 mark. Again, we had a big failure on Friday, a bearish engulfing candlestick, which I've highlighted here on the chart. So this is where I see the euro in general, is that we're trending higher. We've had a big longer term breakout from this level, from down below the 120 mark. We broke up from there, but we've moved up to the next big figure, which is 125, and we're consolidating a bit. So you saw that when the first sign of it was that we had this double top from the high. We broke down, took out the low, so we're no longer uptrending on a daily chart, and we've pulled back. So far, down through this little cluster of lows here is where we found support around the 122 mark, and we've pushed right back up to the high. So it looks pretty strong from a euro perspective at the moment, but you might say not quite as strong as has been seen in the yen. The yen's seen a lot more strength than the euro has, so a bit of a relative underperformance, you might say. So something to bear in mind in terms of if the dollar does get a renewed bid, euro could be one to underperform perhaps the yen. Which has been vice versa for a while. So yen perhaps a bit of a catch-up trade taking place at the moment. So this bearish engulfing candlestick is a bit a sign of weakness in the short term. But if I pull out to this weekly chart, it shows why I personally am hesitant to take that as a signal, because we're still in a fairly strongly trending market. We've seen a pullback for 1 week. We've rallied right back the next week. We've not started taking out. We've not, we've not made a lower low or a lower high on a weekly chart basis. So the longer term trend, while it has, it looks more at risk than it was when we were just vertically trading higher every week. It's all natural enough so far, particularly from a big level like the 125 mark. So to me, I'm hesitant. From a sort of daily standpoint, like a swing trade perspective, to try and get short the market here. We've had 3 successful tests of the 125 mark so far, but if we try for it again, I would imagine there's a greater likelihood of the breakout on that 4th or 5th maybe chance. But we're still all eyes on those highs for the time being. Something, of course, to bear in mind, I think I showed you this last week, is that we do have, it depends how you draw this trend line, so this is pretty open to interpretation, but if you draw it through this first high over here on the weekly chart, connect it through this second high down here, so you're sort of taking out, you're going through the more like you're crossing through the high, obviously, in that candlestick over there, hitting this high here, that's like a little false breakout there. So we're discounting that high, and that takes you down quite neatly to just above where we are at the moment. So it's another long-term reason why we're finding a little bit of resistance in this area. We've not actually bumped up to that trend line yet, but if we do get up to that 126.50 mark, maybe that will be the cause of a larger pullback in the market. So it could be this sort of scenario. We get the first signs of weakness, one last pop to the top side, and then a bigger pullback, potentially. As I said, at the moment, the market's still fairly encouraging. Even on a daily basis, we only briefly popped below the 50 mark, and that proved to be a good buy signal once we popped back above the 50 on the RSI. We had the little, we'd had 2 sort of doji 3-ish, if you count the Sunday candle, doji candles, and then the sort of the breakout above that little set of short-term trading channel, and then we popped nicely up from there, and we found resistance at the old highs. So we're basically consolidating with an uptrend, but it's still way too early, in my opinion, to call the top at this point. So a bit long-winded for the euro. I'll try and speed up a little bit. I might be able to do so because we're actually seeing pretty similar phenomenon in the other markets against the dollar. So same with sterling. We had that long-term breakout through 136, popped up nicely to 143, but that was proved to be the short-term top, and we've had a correction. But only one big down week where the dollar strengthened, and we popped right back up again. So it's still a bit early to say whether we're in fact topping out. Really, it's the lows from the week before last that will give you the kind of most clear signal whether we're in fact heading a lot lower and the trend is reversing. Even then, we're above the kind of long-term trend line here and the weekly 20-week moving average. So if we drop down to the daily chart, you can kind of see the same thing where we dropped down through the 140 level, was supporting us. We had that double top, dropped through the 140, pulled back, made a series of lower lows, but now we've rebounded quite strongly last week, and we've taken out that previous peak here. So either using that peak there, or maybe using these series of highs here down at 140, pull back to the 140 mark, and here we are. You can kind of see that's the 140 mark. It's kind of a line in the sand. Obviously, it's the big round number where the buyers and sellers are doing battle. To me, the fact that we managed to break above that peak there suggests some strength is returning to the market, and there's a good chance that 140 holds. Again, just in terms of probabilities, we're still generally in a longer-term uptrend in my book, and we're above that 50 mark on the daily chart. So, you know, we're kind of below those highs there, so that removes the possible probabilities from going long. But you know, the fact that we're kind of generally trending to the top side adds to it. So this is the dollar yen, the more interesting chart at the moment, because obviously we took out. I mentioned in our quarterly report, I've got this one a bit wrong, to be fair. Our bias was for a topside break above 114.50, but said if we dropped through 109, it negated it. We did drop through 109, and we had a big decline down here. And we basically tested what could be a trend line here, connecting these long-term lows. Found a bit of support basically around 106, but no real denying that we've taken out this weekly low down here. If you can see it better on the daily chart. We took at that extreme low there, but we also took out the first low here. Kind of came down, tested it, and eventually plunged straight through it. When on the sort of fourth-ish attempt, we dropped to the downside. To my credit, last week you may remember that I did say that most likely we're seeing a break to the downside here. A retest of the lows, and then a potential break further down to the downside. So we've more recently, that weakness in the market we did allude to last week. So where do we stand from here? Well, we obviously had a bit of a bounce off the lows, but the trend is very much to the downside. So I think if you're bottom picking here, good chance of a sharp rally back up since we came down so heavily, but you're obviously counter trend trading. It's not my preferred trade at the moment. This one, dollar yen, I think what you want to wait for is a bit of an uptick to sell into the bounce. So moving gears from Forex to the indices, this starting here with the FTSE. So you can kind of see the levels that we're dealing with at the moment. If I zoom that out a bit, it's these two peaks here, and it's all kind of a long-term resistance is around the 7,000 mark, but around 7,100-ish is where we had that resistance, and we've had it held as support a couple of times. And during the big market crash, we dropped through it, but we didn't actually close the week below there. So we're still kind of holding that level for the time being. We did take out that rising trend line, and that seems to be where we're pausing a bit at the moment, is the 7,300 mark. So there's some selling coming into the market today as of Monday, and I wouldn't be surprised to see a bit more follow through on that. it's the chart seems to be making sense at the moment. We're retesting that broken trend line, and I would think that maybe from 7,300 we come down again to test the 7,100 mark as a sort of second test and a potential double bottom on the shorter term chart. So obviously we've been down once, we've been down again, and we're coming off this trend line, you can see. So it would make sense to come drop down to the 7,130 perhaps, if you're being more conservative, more precise on the line. Pretty bearish looking on the daily chart, but obviously we know we're still in pretty much a long-term bull market for stocks. FTSE 100 definitely looking a little softer than others, but still we haven't, we've broken that rising trend line. We're below the moving averages, so it's all quite bearish, but the only hesitancy is just, as I said, trying to short stocks has been an issue for a while. This is Wall Street. So you can see that we've bounced pretty nicely. We had that initial crazy bounce during the week of the sell-off. We sold off again down to the lows, and now we're back at that vicinity. So it's this sort of 25,000 mark, which understandably is a round number, and also where we're sort of seeing the highs for the moment. We're basically consolidating at the moment, and we're up near the top of the range. I wouldn't be surprised to see a little bit of a further push to the top side, but we have seen 1, 2, 3, 4, 5, I think it was 6 straight days of gains on Wall Street. So we're obviously in what was supposed to be a kind of more choppier environment. We are due a down day, and we have just hit that 20-day moving average. So a few reasons stacked up, putting a resistance in this area. I think the high probability trade is short in this vicinity. Again, it's just similar phenomenon that it's not proven to be a particularly successful strategy recently, trying to sell stocks. Also bear in mind this 50 mark on the RSI, also an area of resistance we've creeped above, but not too convincingly. Switching over to the DAX, you can see that we kind of we failed in that breakout once, failed again, and now we're basically holding the support down at the 11,900 mark is that kind of key area of support. And it's this longer term level, that we keep trying to break out from, which is basically sort of 12,430, I suppose you can say, but it's like 12,500 is a round number involved. That's where we're struggling a little bit today. So similar, you can see there's a bit of a pattern across these 3 indices that we're covering. There's a bit of resistance in this area where we currently sit. So if we do push higher today and move confidently above these levels, maybe that's one reason to get more confident on the market. If we do pull back from here, maybe in the days following this week, we could see some bigger declines. Switching over to commodities, kind of a similar in some aspects trend line, longer term trend line in gold as there is in the euro. It's a lot flatter. It's more like a base than it is like a longer term down trend line, but still some resistance, support for the dollar, you could say, and some resistance for these assets you're trading against the dollar, the euro, and the gold, obviously. The moves last week obviously look fairly good from the perspective looking for a breakout. And again, we wrote a special report on this, you may have read, just talking about how the correction in stocks should ultimately be good for gold, particularly if that's supported by a weak dollar environment. So similar thing, we've held this long-term pivot level down at 12.95. We held above it. We held the 1300 mark quite easily. We rebounded for the week, but again, we're right into this downtrend line resistance. We haven't really had that weekly break above it that we need to feel confident. So as of Friday, we had a bit of a kind of reversal from there. We're quite flat today. There's not too much movement in markets today. But you'd imagine we're probably due another little downturn in gold. Well, we're pretty much still in a sideways range on the short term here. Similar kind of patterns we saw in the pound and the euro, right, where we were pushing higher. We had a correction down to the kind of lower phase of lows, took out one set of lows down to the next phase, and we've rallied up nicely. So we're just on the tipping point of breaking out into a new solid uptrend here, but we haven't quite done it. And last but not least, oil. This is the daily chart. We're still below the 50 mark on the RSI, so that makes me a little bit worried. We're below the 20 and the 50-day moving averages, so all kind of characteristics of a downtrend. So typically you would think of this as a rally that you probably want to be selling into. The only reason to be hesitant about that is that we have held on to that 20-week moving average, and we're above the 50 level on the weekly RSI. So again, this is more like a correction in a long-term breakout. So if you are trying to sell up here, you could get unstuck. But I think if we do push a bit higher, still, you've got to pull the trigger when the probabilities increase, even if sometimes it's counter trend. Okay, right. I think that's all the markets we typically cover here. We're about 20 minutes in. I think I'm going to leave it about there. So thanks very much for attending, everyone, and good luck trading for the rest of the week. Jasper signing out.